Yo, what is good, family and friends? Again, my name is Ray. Right. So today, what I want to go over is I actually want to go over some of the tools that we have here in TradingView. Right. One of the biggest tool that I personally use is the Fib retracement. Right. Fibonacci retracement. For the people that don't know what Fib is, right. First thing first, Fibonacci is pretty much the is God's fingerprint. Right. It's literally it has to do with everything in the world. Right. Your ears, like the pattern, pattern on it. Right. Your hands when you do this, there's a pattern, right, which is pretty much the pi number, right, which is 31618, something like that, right? But understand, right, Fibonacci is everywhere on the world, therefore, right, Fib is also in the market because the fact that we humans, right, are pretty much working around the Fib numbers. Guess what? We are the traders in the market, so we will naturally bring that that pattern in here, right? Now, before we actually dive into that, I just want to go over some quote that I learned today, right? Warren Buffett says that the marketplace, right, whether it be stocks, right, foreign exchange, DCX, whatever it is, right. So the market exchange is literally a wealth transfer from the impatience to patience, right? That's all it is, right? So now Fibonacci, right? This right here will actually give you and kind of teach you in a way on how to become patient, because instead of you reacting to the market, right, what you could do is actually you could use your fibs to actually mark up your chart and know when to get in by simply being patient, by simply knowing when to get in, right? But with that being said, right, so like I said, Fibonacci is something that we have everywhere in the world, right? So we have this right here. Well, this is my personal fibs, but the original fibs that we have, let's see. Let's go ahead and find my default, right? So majority of the time, the fibs that they actually have out there is literally the 0, 1, 618.5, 386, 236, right? Understand that there's different levels of retracement, right? There's a deep retracement, there's a shallow retracement, and there's a regular retracement. Me personally, right, I actually use 618 and lower, right? Hence to why I have 618, 786, 71, right? And of course, I also have, point 0.5, right? So I'm gonna go ahead and just hide this 556 because honestly, it doesn't have to be there, right? Now, understand, right, in the market, there's always an impulse, there's always a retracement, right? Or anytime it creates a higher high, it has to create a higher low, right? Or if the market is going down, right, there's a lower high and then lower low, right? So the goal is, right, the whole purpose of Fed retracement is to simply know when to get in after the retracement, right? So with that being said, I actually just want to simply show you guys what I mean by, whenever it creates a higher high. So, when the market is in a bullish movement like this, right? Understand that the market is always moving, right, in a certain way, right? It has to create a higher high, right? Higher low, higher high, higher low, right? Impulse, retracement, upside, and correction. They're all the same thing, right? Just really depend on how you see the market, how you understand the market, right? Like I said, it's all the same thing. Same thing for sell, right? If the market is going on a bearish, right? Bearish or going down or downtrend is the same concept, right? Lower high, lower low, lower high, lower low, lower high, lower low, right? Or retracement, impulse, retracement, right? See, the goal behind this, reason why we want to use our fibs is because we want to catch our next opportunity, right? Because let's just say that you miss your buy opportunity down here, right? You can always catch, right, by being patient, right? Catch the next buy opportunity, which is right here, right? And to determine that area, to determine these area right here, right? What you can use, right? The tools that most people use is your Fibonacci retracement, right? So in this case, oops, in this case, right, looking at this, let me hide all this. Bam. Looking at this, right? what I can do is I can actually place my fibs, right? I'm gonna go ahead and just restart that. I'm gonna place my fibs from the previous high low, right, or the lowest point before it started to move, right, and then move it up and then drag it to your right. So it's up, drag to your right, right, and then of course put it where the the recent high. So with that being said, right, looking at this, ooh, why is it not? Okay. Well, looking at this, right, you know, technically anywhere around 618 or point 0.5 and lower is a area of, area to get in for another buy opportunity, right? Now, understand that 618 is the golden zone. 618 is the golden zone because, right, the reason why they call it golden zone is because that is literally the number, right? That is the area that the market is always attracted to, right? That's where the market is always attracted to. That's where we all retrace, right? So anytime it goes 100% on, anytime it goes on 100% impulse, it has to retrace back at least 60%, right? So now knowing that, well, we can use this to, potentially find an entry, right? So looking at this right now, we're looking at gold, right? We have gold ZAU USD, right? The current price for gold is at 1858, right? Now, let me just go ahead and rewind back, right? Let me just go to daily. Okay, so daily, we see that it's moving sideways right now, but it looks like, it's actually going on the downside a little bit more than, sideways. But let's go ahead and look at it in 4 hours. Now, looking at this, right, I'm going to go ahead and just draw this box up just so you guys know what area I'm looking at, right? So I'm looking at this whole area right here, this whole area right here, right? So let me just go ahead and change the background color. Mm-mm-mm. Hide that so you guys can see the box, right? Looking at this, right? Let's just say, right, this right here, this changed of direction because it was going down and now it started to go up, right? So let's just say that we missed this opportunity, right? Let's just say that you weren't really in the market, you didn't know how to get in, right? You didn't know if it's gonna keep going down, right? But you missed this opportunity right here, right? And then let's say you missed this opportunity over here, which is, by the way, this is all even lows. So technically, I consider this as one area. So this would be like a lower, higher low, right? Lower high. I mean higher low. I'm tripping. So this is higher low, right? Higher high, and then everything else is just pretty much higher low and then higher highs, right? Now, with that being said, what I really want to mainly focus on is this area right here, because this area to this, and to that, right? We can clearly see that it's actually started to push up, right? So what you can do, right, if you miss this opportunity right here, you can easily catch the next opportunity up here, right? And mind you, this hasn't happened yet, right? So to simply do that, what you want to do, family, right, is that there's two ways that you can do this. You can either change your bar, your candlesticks from candlesticks to line, so you can see better, right? I personally, like candlesticks. So what I'm gonna do is I'm gonna go ahead and pull up my fibs, right? I'm gonna mark it up from this low to the last high, which would be this, because this hasn't happened yet. We're trying to catch the buy. And as you guys can see, right, the market went up and then it retraced it back to 50%. Right now, this would be what I would call a regular, right, regular retracement, because it only went 50%, right? And then also anytime it goes to 50%, it's usually a sign that it's actually going to continue. So if it doesn't go to like 618 or so, right, it's usually a sign that this impulse is not done yet. So as you guys can see, right, what it did is that it went up, went to 50%. And if you would have been like one of those person that just want to get in from 50% or 618, right? You guys could have definitely took advantage of this, right? Which is pretty amazing. Me personally, I don't take trades, right? Unless it's in between 7-1 all the way down to 886, right? And as you guys can see, yes, you gotta, definitely easily made some profit off of this. And let's just go and calculate the pips real quick from here to there, the upside before it start to go down, right? you would have caught at least 47 pips, which is amazing. 47 pips is a lot of pips, especially if you just use the proper lot size, right? Now, looking at this though, right, as you guys can see, right, when it went up, it went back down to this lower side, right? It went back to the even, to where we started. So understand, right, that when it comes to retracement, when it comes to using the fibs, it's not always going to be accurate, right? Because most people would have thought that if this movement happened, right? Let's say that you made money from this low to this high, right? So let me go ahead and delete all of this real quick. Shebang, bang, right? And let's just say that you would have placed you would have again used the fibs to find the next entry for buy, right? Placed it from there to the to the from the low to high, right? You're over here trying to catch the bag, right? And it's funny because you guys can see this on a 4 hours time frame that it was just going down past 50%, past 618, past 71, 786. And it's funny how you guys have you guys see this little green candlesticks. That is a sign that it's trying to go up, right? So a lot of people would have been tricked out of that and trying to got in or trying to get in, and you guys want to take L from that, which to me, it's a lesson because, you know, understand that when it comes to in the market, right, it's just a game of trying to find out the best entry and hoping that you're going to make money based off on your analysis, right? So this is why it's also important to have your stop loss. This is why it's important to know that when you're taking trades or when you're investing, that there's risk behind it. You just have to accept those risks, but also mitigate those risks by simply knowing what you're doing in the market, right? So looking at this, right, you guys can see that it went all the way back down to our area, right? So as you guys can see, that happened, and you guys saw that how what happened was that it went all the way down because what it did is that it actually went down to grab some liquidity, right? Liquidity means that there's money sitting that there where they left some money. And as you guys can see, this is all pretty much even lows, right? Except for this one wick right here, which took out the money here, took the money there. But this low right here took this low right here, right? So the money was pretty much being transferred, like I was saying, right? Money's just being transferred from point A to point B, right? As you guys can see, the money was there previously, right? And there's also another money that was created over here because this is higher high, right? And then what happened was when also another one right here, shebang, 1 second, yes, right there. And as you guys can see, right, the market went lower. So now this money's gone, went over here. Of course, all this money is also gone. So I'm just, get them outside the box real quick. So all the liquidity is now on this side. But when this happened right here, now the money is here, right? And we got money up here. And then you guys can see that, the market went all the way down to clear this out. So now this liquidity is gone, right? Now that liquidity is gone, and this right here went lower than this, so therefore the liquidity over here got grabbed and got put on here. So all it is, family, is that money's being transferred, as you guys can see, right? So I hope this was helpful to you guys. This was just a quick short video on how to properly use fibs. You guys can definitely back test this, even on the, if you want to use this when the market is going down, as so, right? Watch this from this high to this low, right? 50%. Look, went down and retrace, went down, right? So this would have been a good opportunity to get in for a sell, right? Same thing here. If you just move it here, right, drag it to the low, of course, went up to 618, nearly at 71, and then retrace and then impulse back down, right? So I hope this is helpful, man. Go ahead and follow my YouTube, support me on my IG and also my social media. If you guys have any questions, definitely hit me up. Peace out.